Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 28 on September 22nd, 2018. I'm your host, Eric, and in this week's show, we will cover the trades from last week on Cleveland-Cliffs, the MSCI Emerging Index Fund, and the QQQ Trust ETF. And we discuss three new trades this week on ADT, Delta Airlines, and Gilead Sciences. Now, it's always great to hear from listeners. If you have any questions about the trades presented here or about your own positions, feel free to email me. My email address is eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. And I've also created a short video series to teach you all the basics of option trading that you'll need to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit our YouTube channel for the Weekly Option. Now this week, the market had a very nice rise. The Dow Jones Industrial Index had its largest weekly gain since the first week of June. The index rose 588 points to finish the week at 26,743 points. The S&P 500 index had milder results, increasing only 24 points to finish the week at 2,929 points. This week, there are 37 companies planning to announce earnings. On Tuesday, we'll hear from KB Home and Nike. On Wednesday, I'll be watching Bed Bath & Beyond, along with Carmax. On Thursday, we'll hear from Accenture, and on Friday, Vail Resorts will announce quarterly earnings. So with all of that being said, let's dive into the results of last week's trades. I always get a little nervous as I follow along and have to report on each week's trades. And honestly, I think all of the talking heads, all of the people out there that suggest and put trades out there to discuss in public should also come back and let you know the results of it just the way I'm doing. So I hope you guys enjoy that. I enjoy it when I win. I don't enjoy it so much when I lose, but I'm sure you understand. So last week we looked at a covered call on Cleveland-Cliffs, symbol CLF, Charles Larry Frank. The stock was trading for $11.51. And I looked at selling the October 12 call and collecting 48 cents, or trying to collect an 8.43% return on our money. And this was an October trade, so it'd be in about 4 or 5 weeks. October 19th is October expiration. So Cleveland-Cliffs stock rose 65 cents this week, ending the week at $12.16. That means that our October 12 call is in the money now, and we are well on our way to achieving our maximum return of 97 cents, or actually 8.43%. So today you can close out the entire position by selling the stock and buying the October 12 call back. You would lock in 33 cents or a 3% return for the week, which isn't too bad. I would ultimately look at staying in this trade. It's winning, and there's another 60 cents on the table if the stock finishes at or above $12 per share. Now, our second trade was a credit spread on the Emerging Markets Index Fund, symbol EEM, Edward Mary. The stock was trading for $41.96, and we looked at selling the October 42.5-43 call spread for 17 cents, with, of course, a maximum loss of 33 cents because we sold a 50-cent spread. Now, the Emerging Market Index had a strong week, rising $1.27 per share to end the week at $43.23. Our once out of the money call spread is officially in the money. So we sold the 42.5-43 call spread for 17 cents. Right now we can exit this trade for 35 cents, meaning a loss of 18 cents on the spread. Now looking at the stock chart and the way this ETF has moved in the past, we still appear to be in a downward trend overall. It hasn't broken out of the downward trend channel, like if you were to draw the lines and actually visually create the trend. It hasn't broken out of that channel yet. So this trade expires in 4 weeks, and the way I look at it, I typically stay in this type of trade. I've even looked at selling a couple of put spreads against this trade to lower the maximum loss. Now, two things will cause me to stay still. First, there's plenty of time left on this trade. You still have another 4 weeks before expiration. I'm going to give it another week before I decide on what to do. Second, since I expect the market to fall again, I don't want to guarantee a loss by selling a put spread against it. Some of you may decide to exit this trade and walk away. It all depends on your risk profile. But I did look at selling the 42.5/42 put spread for 10 cents, which would turn this thing ultimately into an iron condor. But what it would do is it would make it where our total amount collected would be 27 cents on the trade, because we sold the first spread for 17 cents and I'd be collecting 10 cents on the put spread. So that would lower my maximum loss overall from 33 cents to, a little bit less. We will have collected a total of 27 cents, which would mean our maximum loss would be 23 cents. I also looked at the possibility of selling the 43/42.5 put spread, which creates a spread called a box, but that's a little more complex for our group. Now, I could collect 24 cents for selling that put spread. By collecting that money, the 24 cents, that means that overall I will have collected 41 cents on this spread, but I know that unless the price is finished dead in the middle, one of those sides, either the 43/42.5 call spread or the 43/42.5 put spread, one of those will likely end up finishing in the money. So I would be guaranteeing myself a 9-cent loss. So that's the biggest reason why I would just sit still for now and let the price action actually look, because if prices do continue to rise, then we can look at selling some put spreads against it. But if prices go back down, which is what it currently looks like it may do, that's what it's been doing for the past few months, then we still stand to win on this call spread. So I'm going to hang tight. And our final trade last week was that debit spread on the Invesco QQQ Trust, QQQ. The stock was trading for $183.99, and I bought the October 183-184 call spread for 67 cents with a maximum gain of 33 cents, or hopefully a 49% return in 5 weeks. Now, the Qs finished the week 28 cents lower. The spread that we bought is now trading for 63 cents, which is a loss of 4 cents. Now, given the strength that we saw last week in the Dow Index, I'm more inclined to stay in this trade. I fully expect it to finish totally in the money, and that would earn us 33 cents or 49% return. So along with the credit spread, I think this debit spread, I'm going to hold off another week and just see what happens before deciding on a course of action, whether I'm going to figure out ways to protect my capital that's in the trade, or go ahead and exit the trade altogether. So I don't like losing, but the beauty of options is that sometimes, as long as there's time on the clock, you can make additional trades that may actually limit your losses or actually put you in the profit. So, and if you listen to the show, you've seen that happen over and over again. Now, for this week's trades, I really struggled to find some trades that were quality this week. It seems like a couple of these trades that I did decide on are a bit forced, as in I'm only looking at them for the podcast, so I'm being 100% clear. This week's trades are sort of academic in nature. I might simply look past these otherwise if I didn't have to record a podcast this week with 3 different trades. So that being said, just take a look at these spreads, look at it academically. If you see something that you like, absolutely feel free to email me or consider them for your own position. But I'm giving a forewarning up front that I really am looking at these more academically this week. So the first is a covered call on ADT. ADT is the home security company, symbol Apple David Thomas, ADT. Stock is trading for $9.37. And I'm looking at selling the October 10 call against the stock which I would sell for 25 cents. And all in all, that would lead to a 9.39% return in 4 weeks. So pretty good return. I've never traded the stock before. I just sort of noticed that the numbers worked out. So definitely worth taking a look at. Now for these next two trades, I'm going to use a weekly option, which, ironically, of course, is the name of the show, the weekly option. So we're looking at the October 12th expiration in both situations. So these are 3-week options that in both situations have more volume than the monthly October option, which has a October 19th expiration. So the credit spread I'm looking at is on Delta Airlines, symbol DAL, David, Apple, Larry. Stock is trading for $59.61. And again, this is the October 12th expiration. It's a weekly option. I'm looking at selling the 59.58 put spread for 30 cents. Of course, our maximum loss on selling a $1 spread for 30 cents, our maximum loss is 70 cents. And this is expiration in 3 weeks on October 12th. You enter this trade by selling the 59 put for $1.08 and then paying 78 cents for the 58 put, creating a 30-cent put spread altogether. And the final trade for this week is a debit spread on Gilead Sciences. It's the same. I'm looking at an October 12th expiration, so this option will expire in 3 weeks. Gilead Sciences, symbol GILD, George, Isaac, Larry, David. The stock finished this week at $75.51. And I'm looking at buying the 75 half call spread, paying 34 cents. So our maximum gain is 16 cents, and that creates a goal of 47% in 3 weeks. You would enter this trade by buying the 75 call for $1.70 and then selling the 75 half call for $1.36, creating a spread value of 34 cents. And just as a reminder, when you're doing these spreads, make sure that you enter them in as a spread trade so you don't get executed on one side and not filled on the other side. So that's it for this week's show. Again, if you have any questions, email me at eric@theweeklyoption.com. I always love hearing from some of you, and hearing some of the questions you guys have had really shows that you guys are putting some of these trades into action, and I love it. So keep up the good work. I hope you have a fantastic week. Happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.